Good afternoon, everyone. I'm Zach Myers with the Center for Dairy Excellence. Thank you for taking the time today to join my Protecting Your Profits webinar. If you have any questions, please type them in the chat box by clicking on the chat box at the bottom of your screen and type your question. I will monitor the chat box and answer questions I am able or at the end of the presentation. My goal is to provide an overview of current dairy market and to review current dairy markets and review risk management opportunities. And on my normal disclaimer here, this is all public information, and while I may express some opinions, these certainly are not recommendations. So, and if there's anyone watching the live stream, you can also submit your questions there on Facebook or YouTube. We are monitoring that as well, and we'll answer any questions that come via those platforms as well. And with that, we'll just jump into today's presentation. It's the normal agenda of things I normally cover, and we'll just dive on into the data. At over 18 billion pounds, U.S. milk production was actually down a little bit, about 0.5% year over year, to 18.5 billion pounds. Pennsylvania milk production was down about 3.1% year over year. Cow numbers in the U.S. have declined to 9.4 million. This is actually the first time in several since last May that year over year cow numbers have decreased. Since the May 2021 peak of 9.507 million cows, the U.S. cow numbers have been decreasing month over month, which if you do that math, that's a herd size decrease of 107,000 head since the end of May this year. Pennsylvania, when other surrounding states are losing cows, Pennsylvania is actually been able to maintain 475,000 cows all year this year. Unfortunately, this is still down about 1.5% over last September, but it's good that Pennsylvania has been able to maintain. Looking back at last year, Pennsylvania lost a lot of cows, and being able to maintain where we are now is a good thing. That dairy slaughter number, I forgot to delete that. That's actually last month's number there. The September or the October dairy slaughter report will come out today, actually. So later on this afternoon, we'll know what's October dairy slaughter looked like. Moving on to dairy product stocks. Butter stocks shrunk during September, while cheese and non-fat dry milk stocks grew through September and October. October butter stocks finished the month down 18 million pounds to 281 million pounds. October cheese stocks grew about 110 million pounds to 1.5 billion pounds. And September non-fat dry milk stocks were up about 52 million pounds to 244 million pounds. And on the product price side, at $1.92 per pound, October butter price is 55 cents higher than last year, and continues to be a significant discount compared to international prices, with global dairy trade price at $2.79 a pound and the European Union price at $2.55 a pound. Cheese price is up a slight 4 cents compared to last year, and is also a discount compared to global dairy trade at $2.01, and virtually the same as the EU at $1.72 per pound. At $1.49 per pound, non-fat dry milk is 37 cents more than last year, and is slightly lower than the global dairy trade price of $1.54, but 17 cents higher than the EU price at $1.32. But one thing to note that the European Union doesn't make non-fat dry milk. They make skim milk powder, and non-fat dry milk has a standardized amount of protein that is higher than the average protein content in skim milk powders. So, excuse me. So the non-fat dry milk powder is actually is with the extra protein is a higher price product than if you just look at skim milk powder alone. Moving on to the production side of dairy products, September butter production was down 7.3 million pounds compared to last September to 143 million. September total cheese production was up 37 million pounds to 1.14 billion pounds. And then September non-fat dry milk powder production was down 3.8 million compared to last year to 122 million pounds. Looking at the demand data and with disappearance during September, butter disappearance was up 11% to 187 million pounds due to a strong 9% increase in domestic use and a 200+% increase in exports. The U.S. doesn't normally export a lot of butter, but with butter fat in short supply, there's pretty high demand domestically and internationally for butter fat. At 440 million pounds, American cheese disappearance was down about 2.5% because of decreased domestic disappearance that overwhelmed a slight increase in exports. Other style cheeses are up to 706 million pounds, and a slight 1% more than last year, driven by an increase of 10 million pounds in exports that offset a 4 million pound decrease in domestic use of other style cheeses in the U.S. Milk powder disappearance was down 16.5% to 200 it was down 8% to 227 million pounds, and that's mainly due to decreases in exports. Now, what does all this mean for our current our milk price? We're looking at Class 3 milk futures for the next 12 months, and these as you see there on your graph, these prices are 11/22 closing prices, November 22nd closing prices. The Class 3 milk futures for the next 12 months are up about 28 cents compared to this time last month. And again, based on those November 22 closing prices, the Class 3 futures price averaged $18.86 a hundredweight. November Class 3 was the low at $17.95 and increases to a high of $19.11 in February, and then levels out in the low 19s and upper 18s through next October. That current Class 3 12-month average price is $2.30 a hundredweight more than the 5-year average of $16.56 a hundredweight. Class 4 and class prices are expected to inverse this month and stay inverted through at least next October. So drawing your attention again to the graph, that orange or reddish line is actually Class 4 with the blue line Class 3 below it. The Class 4 price for November is currently the lowest price for the next 12 months at $17.95. It climbs to the mid 1950s for before dropping a quarter through next October. So a strong Class 4 price indicated by the futures market right now. The Class 4 12-month average increased to $18.26 a hundredweight, which is $1.16 more than last month, and is $4.52 more than the 5-year average price of $14.90. Moving on to exports. September exports reached just a little bit more than 186,000 metric tons of milk solids equivalents. This is up 14% from last September. And these 186,000 metric tons are valued at about $655 million, which is up 28% from last September. So we're still on track to set a volume record this year. And if milk price stays high and the volumes volumes of export stay high, will probably break the value record that was set in 2014 as well. So worth noting that that as long as this congestion in the western ports can be somewhat alleviated, hopefully the dairy products, our surplus dairy products, can continue to get out of the country to their foreign destinations. So moving on to risk management, the September dairy margin coverage margin was announced at $6.93 a hundredweight. This triggers a $2.57 indemnity payment at the $9.50 coverage. And this is about $2,000. It's a payment of about $2,000 per 1 million pounds of production history up to that 5 million cap. And annually, so far, that adding the September benefit to that, that's about nearly $22,000 paid out in DMC indemnities per 1 million pounds of production history. Again, up to that tier 1 5 million pound production history cap. This equates to a $2.03 net benefit so far for 2021. The October margin will be announced next Tuesday after 3 p.m. when the ag prices report is released. The DMC decision tool is still unavailable for feed price and projections and trigger prices. I know the management of that tool switched over in October, and my assumption is, and I know there's an update scheduled, and my assumption is that they're waiting for these rules to be published before they finalize that update to their online tool and get that pushed out. So again, we're still waiting on the rules to be published on the feed price change with alfalfa, supplemental production history, and 2022 enrollment period. So my understanding is that regardless of when enrollment, the 2022 enrollment is open, that it will be open for at least 45 days. I think by law it has to be open for 45 days. So even if it's next year before 2022 enrollment begins, we'll still have the same amount of time we normally would once that enrollment is open. And everything will be retroactive, including that supplemental production history is retroactive to the beginning of for January of 2021, and the feed alfalfa hay feed price changes will be retroactive back to January 1st of 2020. So all of those rules are still in line as soon as everything's finalized. Moving on to dairy revenue protection, the DRP prices shown here are based on November 17th closing prices. A couple of USDA reports came out at the end of last week and the beginning of this week, which of course makes DRP pricing and policies unavailable. And that trade until the end of trading actually yesterday. So quotes were generated yesterday, but I didn't have time to update this before I had already sent it out. So 100% class 3, 95% price protected floors can be set from a low of 1693 in Q1 of 2023 to a high of 1795 in the third quarter of 22 for an average of about 33 cents a hundredweight. These floor prices on average are in the 80th percentile of their respective quarterly 5-year average prices. So are indicating that these are relatively good price floors to set if you're willing to pay for those premiums. On the class 4 side, the 100% class 4, 95% price protect policies can be purchased to set price floors from a low of 17.15 in first quarter 2023 up to $18.05 in the third quarter of 2022 for an average of a cost of about 40 cents per hundredweight. So these prices are all for all 5 quarters are in the 100th percentile of their respective quarterly prices, indicating that the average price now is the highest it's been in 5 years. So I know that the premiums may look pricey, but these class 4 prices are really good and at least worth considering looking at to cover a little bit of your production at those higher premium prices. And although class 4 and 3 are inversed for the foreseeable future on the CME, we know that from history that class 4 doesn't normally trade higher than class 3 for very long. So I guess the question you have to ask yourself and answer is when will we see a correction and that class 4 price begin to drop, and making these class 4 policies an important thing to consider in your risk management strategy. So far in 2022 crop production year, there's 15.3 billion pounds of milk covered in the United States in just under 1,500 policies. 171 million pounds of milk have been covered in Pennsylvania by 66 policies. And of course, we don't have any information. Should know maybe this time next month on that first quarter of the 2022 crop year, if anything was indemnified from July to September. So just a quick update on the Pandemic Market Volatility Assistance Program. I sent an email to my contact at the Agricultural Marketing Service yesterday and heard back about an hour and a half ago from her that to get a sort of an update. I've been hearing some rumors out there as to what was going on, and I thought I would get some information and share it with the participants of this webinar. They're still in the process. They're to the point where they're in the process of finalizing all the data that was submitted to them by the eligible milk handlers. Once accurate and complete data sets are compiled, AMS will then be able to calculate those payments. And of course, there's a considerable amount of work that'll go into verifying the accuracy of the data and making sure those data sets are correct before they start to calculate these payments. They're still on target to have funds distributed sometime in early winter to the milk handlers. After funds are distributed to the milk handlers, handlers have 30 days to get the money distributed to their eligible dairy farmers. And of course, the rumor I've heard is that some milk handlers have received their payment and or knew what the pay rate was going to be. And I was told that as of now, no funds have been distributed, no payments have been announced to milk handlers or the public. They're still in process. So hopefully sometime here in the next couple of months, that money will get out to dairy farmers, and hopefully I don't have any estimate on what those payments are going to be, as they'll be different from milk handler to milk handler. With that, that is it. The next Protecting Your Profits will be December 22nd, 2021 at noon. The link is there, and of course I'll be emailing that out prior to next month's webinar. And with that, are there any questions? Well, if not, thank you I know this was maybe not the most convenient time the day before Thanksgiving to be on a webinar, but I see there's a few telephone numbers out there, so maybe you're traveling home to family and friends or whatever for Thanksgiving. But I do appreciate those of you joining us today so close to Thanksgiving Day tomorrow, and I look forward to talking with you again next month. I hope everyone has a happy Thanksgiving.